We have seen a lot of volatility recently with everything going on with FTX, BlockFi, and many others on the cusp of serious downfall. We should really consider what is going on with Bitcoin. In this video, I'm going to be jumping down into the price chart for Bitcoin itself. We'll be taking a look at various different time frames, taking a look at the big macro pictures and what's going on the smaller time frames as well. We'll also take a look at what's going on with exchange data, because obviously these things that have been going on most recently when it comes to FTX and BlockFi, etc. This has a huge impact across multiple assets, but specifically a bit of a knock-on effect to exchanges. And I'm going to talk a little bit about that as well in this video. So as I get into it, smash the like button if you find it useful and informative, hit the like button, and if you are new to the channel, go ahead and subscribe to stay up to date with everything that we do here at Cheeky Crypto. And don't forget, join Discord, links in the description below. It is a centralized hub of everything. Stay ahead of the curve by joining that Discord server. Okay, so Bitcoin on the hourly chart, we kind of see this kind of move to the downside. Now, if you're following what we've been talking about for the last month, none of these new lower lows would have been anything unusual. The unusual thing is no one really knows what the catalyst for downside is going to be. You can see that downside was going to happen, but you don't know really what's going to cause it. And we're going to jump into a lot of data here in this video that kind of says, okay, well, we've seen the FTX thing, we've seen the BlockFi thing, and there's probably going to be others that drag the prices of crypto assets down further. But none of this is really what I was expecting to occur. What I was expecting to occur is actually yet to happen, and therefore potential for further downside on the back of all of that as well. So although I've been calling new lower lows, and we kind of knew that FTX was on some pretty delicate kind of ground as it was, we kind of were speaking about the FTX thing probably a week or so before the event, and doesn't necessarily mean that we predicted exactly when that was going to occur or the exact kind of fallout of that. Okay, but what we do know is that we've achieved one lower low. Doesn't mean that the new bottom is in. That's not kind of what this is about. Instead, we want to be really focusing in on thinking about where that next catalyst for downside comes from. Okay. So in this particular screen here, you can kind of see we've got these 5 waves down here. We've moved up to this area that I've called supply. Okay, we can kind of see that right there. Now we've come down a little bit here, and I think we're going to retest this area before falling again. And it's going to be interesting because we're on a Friday here. It's really hard to know exactly what the weekend's going to do for the price action. Now, obviously, weekend volumes drop down typically. And normally it's retail driven. Right now, there's a lot of fear in the market, and retail could drag this down further without the institutional players really being that active over the weekend. So my thought process here is that we come up into the supply zone one more time, retest this range, get rejected, and then start talking about going down, probably losing this existing low at 15.5. Now, anyone who's familiar with the channel will know that we were talking about specifically on the daily here, this range here, right? We're talking about the 16,300 to 16,700, and more specifically the order block down here at the 15 to 15.5. And we've actually narrowly avoided this order block, but there are orders here, and that's liquidity. So if there are people looking to sell, this is where the price is going to gravitate towards, as there are some buyers still in this little range down here. So we want to be a little bit aware that down in this kind of 15k range, maybe a little bit lower if we chew through all of those orders, is where the price is going to want to gravitate down towards it. Now, as I kind of was hinting there at the beginning of this video, there's a lot of rollout, a lot of fallout, a lot of impact to everything that's been going on with the FTX scenario. So what I want to do is I want to bring up this particular chart. Okay, we talk about this on the Twitch live streams pretty much every day, though we were actually away in London for a couple of days there during this kind of moment, unfortunately. But we can see here that on the 9th, we saw 134,000 BTC leave the exchanges, and 106,000 BTC go onto the exchanges. Then yesterday we see 120 going off the exchanges with 90 going on. Okay, so with buyers and sellers here, but there is also this other issue that's kind of being compounded, and that is that people are basically doing, for less of a better word, a bank run on crypto. Okay, so basically people are trying to rush to get their crypto off the exchanges. And well, we've been saying it pretty much for the majority of the time here that you probably shouldn't be keeping your crypto on exchanges, right? Now, we say this in a bull run through hacks and things like that, and we're saying it in a bear market because essentially, in a bear markets you don't know who's going to survive, who's not going to survive. The exchanges are included in those things, specifically if you're not doing things legitimately, and maybe you're kind of floating yourself up there, artificially, and then essentially you're going to expose yourself to a massive amount of risk as a platform. So you want to be aware that there's a bit of a knock-on effect. Join us in Discord. There's a whole host of different exchanges that you're going to want to know about, so I'll link in the description below. I won't go into all in this particular video. Discord's the centralized hub of everything. Check that out. But here we can see that there's a huge run on getting crypto off the exchanges. Now, some has been going onto the exchanges as people are fearful and they're wanting to sell their assets, and others who are already on the exchanges have been taking it off. Okay, so normally, under normal circumstances, we would take a look at this graph and we'd say, fantastic, we finally got demand coming in. But actually, the circumstances of the withdrawals are different. Okay, this basically tells us that it's not really demand driven. And we can also see, if we go down a little bit further and we take a look at the retail investors, who's been withdrawing from the exchanges, because we see there's a surge in certain wallet counts. Okay, so we can see that our high net worth individuals, but retail investors have been coming out, and we can see that the shrimps, which are our basic 1 Bitcoiners, the retail investor, the people who aspire to own 1 Bitcoin, right? And you can see that these guys have been withdrawing from the exchanges, and this is why you're seeing this huge increase in the number of wallets that hold at least 1 Bitcoin. Okay, so you can see this surging right up here. So this would normally look like a really bullish time, right? You'd expect to see really good times for Bitcoin with huge accumulation and things like that. Unfortunately, the circumstances that led into this has actually given you the opposite. It's actually telling you that there's a lot of fear in the market here, and there's a run on the crypto exchanges to withdraw as much as possible. And this has a bit of an impact. It means that those exchanges are going to get squeezed down. Okay, sometimes they over leverage themselves and they potentially create a bit of a scenario where they are illiquid and they are unable to provide you with your own crypto. This is something that happens in the banking industry. You call it a run on the banks when everyone tries to withdraw their fiat, and hey, the banks don't have it. So they stop you or they limit you from withdrawing. And this is going to be an issue that we're going to start seeing as more and more people run on those exchanges. More and more withdrawals are going to get suspended. You're not going to be able to withdraw. So I don't want to kind of compound the issue by talking about it too much, but I do think that, considering the size of our channel, there's a small community here that I do want to look after. If you're on exchanges, it's probably not a wise idea. Now, I can't give you financial advice. I'm not a financial advisor, but personally, I'm in cold storage. I'm using a Ledger hardware wallet, links in the description below, and I'm storing it offline, right? No, it's not offline, but I'm basically storing my private keys in an offline wallet and basically keeping it off the exchanges, keeping my crypto under my control rather than under the control of a particular platform. And Celsius also highlighted this issue not too long ago. A lot of people had assets on Celsius, and then Celsius are using those assets as collateral for paying off their creditors and so forth, right? They're not paying you guys back, the people who actually owned the crypto, they're paying off other people. So just bear in mind that the similar situations could occur with different exchanges if they start to really crumble and fall. So keeping it on exchanges is bad, and what we're witnessing here is a run on those exchanges with people front running that and trying to get their crypto off at ASAP. It's not a bad idea, in my opinion. Control your assets. Now, we can obviously see that what's going on with the other size wallets. We can see some traders here. They've been withdrawing again from the exchanges. You can see that here where people have been dumping, you can see that the whales continue to de-risk and come out. The Krakens haven't really changed terribly too much. They accumulated a little bit here. Again, probably pulling it off the exchanges, putting it into cold storage way ahead of time, guys, way ahead of time. This is why we say follow the money, follow what they're doing, and nothing else more than that. So just be aware there's a lot of things going on in the background here that these could potentially have an impact on price. So as we think about these things and we kind of see the 5-wave structure here, we moved up into this range here. This could be, and I say could be, it's not guaranteed yet. There's so many different variables and different ways that this could play out. But this looks like it could be maybe a wave 1. This could be a wave 2, and we could be looking for a wave 3. Alternatively, we could be looking at a zigzag down here. We could be looking at this as an A wave. We could be looking at this as a B wave, and we could be looking for a C wave to come down again. And I look at this particular area, specifically coming back up into our supply zone here, as a potential run as well, where we're looking like this. 1, this could be 2. We can come down here for 3, 4, and 5. So I'm not confident that to think that this is a new bottom and we're going to be really confident in moving on up or anything like that. There are some key levels that I am kind of cautious on. Obviously, $14,600 would be a trigger of a 5-wave structure on a macro time frame. So if we bring this in, you can kind of see here, we would potentially hit this wave 3, wave 4, wave 5. I don't think this is actually technically accurate because I don't think we got the correct wave counts to allow for this. I think this would be more of a WXYXZ scenario, but it would be something that we'd have to kind of think about and have to consider. This could be WXYXZ, for example, and we could just come down here and be done and then get the reversal. That would be really positive, but I'm not seeing the wallet counts represent that. So instead, we might end up with a really complicated structure towards the end here, but I don't think it's necessarily going to be 5 waves. But $14,600 is a bit of a concerning point for us. And also, if I come up into our monthly time frame, we can see that there's some key areas for us. This is the previous area of demand we were looking for, looking to keep, right? And we see that right now, we're in this monthly time frame, we've pulled back down quite a bit. The next kind of key level for this is down here at $13,880. Now, this is USD, not USDT, like my Binance chart. But it gives you a bit of an idea. And again, you can see as we move down here a little bit lower, the $9,500 level as well as the key level after we break that 13,880. Now, none of these are guarantees. None of this is. I would look at this as a pretty clear kind of corrective structure at this point. I don't think we're trending to the downside in the Elliott wave theory technical aspect of it. But if I do come back here, and I throw on the EMAs, then you can, of course, see, if I throw that one on there, that we are below both the 100 and 200 EMAs. So this is pretty much a bearish situation. We can see that we tested these areas before and got rejected. Even if I bring this down to the daily, this is what I was talking about just a few days ago, just before we actually saw all of this FTX stuff. We're testing this 100 EMA, and the 200 EMA is way up there, right? So we know that we're going to get rejected, or we're looking at rejection from here, that this is going to be a pretty brutal time for us. Now, we're obviously looking at this as 3-wave structures and all that kind of stuff as well. WXYXZ moving up and breaking down. So for the most part, we came down to our expectations on this range. There's nothing unusual about this. The only unusual activity really comes on whether or not we're going to be pushing down that ever so slightly more before we actually get that bounce upwards. Now, if I bring this back down to our hourly here, and what I'll do is I'll remove our EMAs, even though we're still below those on the hourly there. If I bring up our stochastics, you can, of course, see that we're overbought on the 4-hour. We're moving up to the overbought area here on our hourly chart. You can see we're still getting a lot of volatility. There's a lot of resistance right in here as well, guys. And this comes in at about 17,415 up to approximately the 17,535 range. So there's a lot of resistance in there. So there's no guarantee that we retest this supply zone. It's just kind of an area that I do think is likely to get tested. Now, on the 4-hourly, we're already up in the overbought area, so we're up against it there. On the 8-hourly, we're progressing upwards without really terribly doing too much in the way of progression. So just be a little bit cautious there. The daily is actually in a reasonable position. I'm not too concerned about that, but the weekly is high. This needs to come down quite a bit. So there's still a lot of downside to be had here. Definitely don't want to be too confident. I guess the message here is that let's give it some time, give it some patience to kind of see how these structures emerges and how they kind of look to kind of finish things off. But I'm definitely not going to be in any particularly buying mood anytime soon. I am kind of waiting to see better structures, better ideas as to kind of where things are looking to land, with some kind of concerns over new lower lows continuing to move down. And I do think that is something that we're going to see for the rest of this kind of year. I'm not expecting any kind of remarkable kind of reversal in structure and automatically take us up. Instead, I'm just looking at where this thing is likely to go, what the wider economic climate is looking like. There's a lot of things going on. I do think a lot of people are going to struggle. They're going to be forced into selling their assets just to be able to pay their mortgages as mortgage rates go up, etc. So essentially, you know, everything that's going on with the Fed and everything that's going on globally, I'm not optimistic to think that we're going to be going into a bull run within the next 6 months or anything like that. So for the most part, I'm enjoying kind of, looking at some cheaper prices, taking advantage of the markets as time allows. And yeah, just looking to accumulate as much as possible. But as I said, I'm not buying right now. I think there's better prices to come in the near future. Guys, I'm going to leave this video right there. If you have found it useful, smash the like button. If you're new, subscribe. Join us down in Discord. Let me know your thoughts in the comments. And guys, I'll catch you in the next one.